Hi, welcome to Propfirm Trades, where we do profitable trades. So you've been on a losing streak, you've been losing your money, your hard-earned cash, and that's not really ideal. What you'd want to see is a profitable compounding trade, profits, where you see your account growing, not where you see your account losing out. So I want to teach you on some few things that you can pay attention to as you trade, whether it's a synthetic index or it's a stock or futures or whatever it is that you'd want to trade. I want you to focus on some of the things that I'll give you right now so that you can change and also experience some profits. When you're trading, one thing that I like about it is that you at times you don't really have to be saying I want to make maybe a whole lot of money in a single day. You compound, you make the money bit by bit until after maybe 30 days you add up and you see that you've made 1,000, you've made 2,000, you've made 5, you've made 20k, but you're compounding. So let's get to it. One of the setups that I like trading, what I like using in my trades are trend lines. So when you're drawing a trend line, you have to pay attention that your trend has to touch at least 2 to 3 points, or at least 2, so that you can use the third or the fourth touch point for your entry point. So that's our highest point there. And then this is our next touch point right here. So we connect those 2 dots. After connecting, you can see that this was our first touch point and this was our second, and you can see that this then becomes a third touch point where the price is gravitating to the trend line. So another thing that you want to do after you've marked your trend line is look for obvious support and resistance zones or support and resistance areas. So you look for the bottom part where the price last touched, like this one right here. As you can see, this is when, okay, let me just scroll to the left so that you guys can see. So when you draw your line, you'll have to check for price movement to the left side. Never forget that, so that you see price behavior at that certain area. So we've drawn our trend line. It shows that in this point in time, price was moving downwards. As we can see, price went up, went down, went up, went down, went up, and went down, and eventually went up. So when we drew our trend line, we noticed that price went up and went and touched the trend line, then went down, went and touched it again, went down, then broke through. So when you draw your obvious support and resistance zones, it will help you find entry points in the market. So let's say we have this point, and that point price is already moving downwards. Let's say price is somewhere here at this juncture. We've already drawn this, our support or resistance, to mark our support or resistance zone. So as you can see, price went up and touched this resistance area and went down, and it came back to test it again and went down a bit, then broke through and retested it as a support area and went up. When price came down again and reached that same zone, you can see that it touched it and then went up. This is where it then created our second touch point, and then it went down. So when you are looking for entries, you want to look for safe entries. You want to look for places that will not give you a headache. So as we have drawn our support or resistance area because the support tends to be a resistance and it tends to be a support again. Like here, this was a resistance, this was a resistance, this was a support, this was a support, and here it broke through. So if you draw your line, you want to look for retests of this area, of this line. You want to look for a retest of that and also a retest of your trend line. So you have your first point, your second touch. So now if price is going down, you want to look for a retest. Like in this area, this was the retest that had actually two confluencing factors. Price went up to retest this area here, and what I like about it, it actually had three confluencing factors. There's this resistance, horizontal resistance, and the second one is the touch of the trend line, and the third one is this doji right here, the bullish doji. This doji is also confirmation that our upward movement is about to end. It actually shows indecision, but it can be used for you to enter the market. So when price touches here or gets close, very close to this trend line in this resistance area, you can place your trade here. After you place your trade here, where will you get out? You get out at the next support or at the next resistance. Let me take a horizontal line. So when price went down, it reached this point, then came up. So this is your trough. Price, remember, moves in higher highs, higher lows, higher highs, higher lows. So you'd want to mark the last point reached by the price when it went down, which is this point. Then price went up. So when you get in here, you'd want to take partial profits at this end, right at this point. You'd want to take partial profits and leave some trades running. If you want to take all of your profits, you still can. So as you can see, you would have caught all of this movement right here. That's enough for you to increase your account. It's enough for you to compound. It's enough for you to be profitable. So when price got here, it went down again. So price went here and retested. If you want again, you can actually enter this at this place, because as we drew, this is our support and resistance. So price obviously will want to retest this area, and I'll talk about this in later videos. But as you can see, price dropped and had a base here and it dropped again. So when price went up, it was retesting that base or that resistance area, and then it came down. So when it comes down, your ideal take profits zone will be the last point reached by the price, which was here. This was the last point reached by the price. So when you get in here at this retest, you'd want to come out right in line with this, just there, or leave some hanging. But as you can see, price then ended this and went up and broke through, and when it broke through, it came just to retest and then went up. So this will give you safe zones so that you do not lose your hard-earned cash and you do not lose your account and you do not blow your account. So you ideally want to take your trades in safe zones. I've given you the safe zones. It's at places where there are touches to the trend line. The third touch, it's in line also with the support and resistance, and also at retests of resistance areas. As you can see, if you've done BTMM, I want to BTMM, beat the market maker. This is our core area. This is the first level. This is the second level. This is the third level. So price moves in this fashion, creates an M here, then comes down, creates an A, comes down, creates another A, comes down, then does a W, which just shows you that this movement is over. So you'd want to get out. hit this W at this end, especially after you see these zones created. So this area gives you a safe trading zone. You wouldn't lose your hard-earned cash from there. So now that I've given you tips on how to trade safely and how to maximize your profit and minimize your losses, go into your chart and also look for these areas where you can see that this is an obvious support, this is an obvious resistance zone, and also be able to mark with your trend lines and see if you can actually reproduce what we were doing here. And if you can, just see where you might have entered or where you can enter and exit. Whenever you enter it at the beginning of a movement, a downward movement of price, you always want to enter at the next support or resistance level. Otherwise, if you do not do that, price might actually go back up and eat into your profits. Otherwise, have a happy trading.